The Employee Retention Credit from the IRS is the last major COVID relief program. Claim up to $26,000 for each employee you had on payroll. This is Marty Stewart with Disaster Loan Advisors. The IRS tax refund is newfound money for your business. Let us help you navigate the ERC program with flexible options and working together. You can relax and have peace of mind that you're in good hands. Stay safe, stay compliant, and keep more of your refund. Take the next step and schedule a free ERC consultation call with us today.
Everything you should know about Employee Retention Tax Credit Deadline. The ERTC was created by the Coronavirus Aid, Relief, and Economic Security (CARES) Act. The CARES Act, which takes effect in March 2020, assists employers in keeping people on the payroll. The Consolidated Appropriations Act 2021 as well as the American Rescue Plan Act, ARP, are two more measures that have an influence on the ERTC and the deadline. Through 2021, both acts changed and extended incentives and promissory notes. Furthermore, the Infrastructure Investment and Jobs Act was passed into law by President Biden in 2021, which has changed the Employee Retention Tax Credit deadline from a previous date. In fact, it is important to learn about the Employee Retention Tax Credit deadline so that the businesses can get the right benefits from the Employee Retention Tax Credit. Who is eligible for the Employee Retention Credit 2021? The eligibility determination is based on 2019 data. Total revenues in 2020 or 2021 should be at least 20% lower each quarter than they were in the corresponding quarter in 2019. Businesses employing 100 or fewer full-time workers may be eligible for a pay credit of 100%. Whether the company is open today or under a shutdown order, this rule applies. To be eligible, the company must be in the private industry or a tax-exempt organization, and the following events must occur in 2020 or 2021. During COVID-19, operations may be completely or partially halted due to government restrictions on commerce. 50% or less in gross receipts in the same quarter in 2019. A recovery startup with yearly gross sales of $1 million or less and an ERC ceiling of $50,000 that launches after February 15, 2020. If your company recovered from a significant drop in gross revenue and you did not take the credit, you will be able to do so in 2022. Companies have 3 years after the program's closure to review salaries earned after March 12, 2020 to see if they are eligible. Employers can now exclude all the value of repayment of a PPO mortgage, closing down venue owner's grant amount from the Restaurant Revitalization Fund. When evaluating eligibility for ERTC, these amounts do not need to be included in gross revenues. You should appeal for safe haven throughout all institutions. Is the Employee Retention Credit taxable income? The Employee Retention Credit, ERC, has only been around for a couple of years. Why are we still talking about the ERC if it has been present for so long? Because if a company qualifies, it will receive a significant reward. Businesses can use a few techniques to optimize both the ERC and debt forgiveness under the Paycheck Protection Program, PPP. Once a company has confirmed its eligibility and calculated its ERC, the important part begins, claiming the credit and receiving a refund. The ERC claimed by businesses. On their federal payroll tax returns, qualified employers record their ERC-eligible salaries and receive the appropriate tax credits. Form 941. Because the ERC no longer applies after the third quarter of 2021 and third quarter payroll tax reports were due at the end of October, an updated payroll tax return is the only way to claim the credit today. Form 941X. Employers used to be able to seek early payment from the IRS by filing Form 7200 before the end of the third quarter, but that alternative is no longer accessible. Amended payroll tax returns could be based on approaches years after the initial return filing deadline, so you still have time. How does the ERC affect my tax return? Under IRC Section 280C, employer government subsidies reduce salaries by the amount of the ERC. Because this decrease happens in the year in which the wages were paid, a credit for 2021 must be included on the 2021 tax return, even though a refund has not yet been received. Taxpayers may be forced to reflect an ERC on their return, increasing taxable income, before they get a payout due to IRS delays in reviewing amended forms. That implies that determining ERC eligibility fast might be beneficial to enterprises. If the ERC was tried to claim in 2021 for 2020 quarters, which is highly likely because many PPP debtors were not eligible till the end of 2020, and the 2020 income tax return had already been filed, a revised business income tax return or organizational adaptation request for collaborations must be filed displaying the wage reduction. The credit will not appear on your tax return until 2021. How does the Employee Retention Tax Credit work? The retention credit is calculated using many parameters. For recovery beginnings, qualifying salaries must be provided during March 12, 2020 and September 30, 2021, as well as December 31, 2021. Only salaries not remitted through PPP are eligible for credit. The amount of medical costs that qualify is determined by the circumstances. This covers per-tax contributions from both the employee and the employer, but not after-tax amounts. Businesses must monetize the ERTC for each payroll period by completing a quarterly payroll tax form using Form 941 to get the credit. The credit is monetized by the behavior to achieve the payroll taxes it deducts from employee earnings. A firm might receive a $70,000 credit if it pays $100,000 in payroll. They hold the payroll taxes as scoring progress with ERTC. That is something the distressed employers can utilize from Social Security. Because ERC was terminated early, firms now owe the Treasury payroll taxes collected for the fourth quarter of 2021. The corporation faces a 10% punishment for failing to pay payroll taxes. Credit limit for the employee retention, except if the company is a recovering startup. The Infrastructure Investment and Jobs Act, IIJA, of 2021 changed Section 3134 of the Income Tax Act to limit the employee retention credit to wages earned from October 1, 2021. CIRS releases advising on the employee retention credit's retroactive termination for additional details. The employee retention credit is a refundable tax credit equivalent to 50% of qualifying salaries paid to employees by an eligible firm between March 12, 2020 and January 1, 2021. Employers who are eligible for the credit might obtain it right now by lowering the amount of employment tax payments they must make. Additionally, if the employer's employment tax payments are insufficient to meet the credit, the IRS may make an advance payment to the employer. Wages, along with some health plan fees, up to $10,000 per employee can be used to calculate the amount of the 50% credit. Many struggling companies can receive this benefit by lowering forthcoming contributions or seeking an early credit on Form 7200, advancement of employee credit due to COVID-19, as it can relate to salaries previously paid after March 12, 2020. Employers, especially tax-exempt groups, are qualified again for credit if they run a business or company in 2020 and experience one of the following. Gross receipts begin to fall significantly. The sharp drop in gross receipts comes to an end. The credit is available for qualifying salaries, including some health plan expenditures, paid during this time or any calendar quarter in which activities were halted. Employee retention tax credit deadline. The deadline for qualified firms to claim the ERTC is July the 31st of October 31 and December 31st, 2021. With their employee per quarter Form 941 tax filings. To file for the ERTC with their quarterly returns, business taxpayers will require extra payroll data and other papers. When filing an updated refundable tax credit with the IRS, the turnaround time is 90 to 120 days for eligible employers, whereas filing an initial return takes 30 to 60 days for employment tax deposits. Businesses that may be qualified for the ERTC should take the following procedures for the income tax returns. According to Hayes, determine if the company's personnel fit the ERTC standards as soon as possible. Visit the ERTC webpage of the IRS. Find all payroll data from the last several years. Contact a business solutions provider if an eligible employer is unable to identify eligibility or produce the required Form 941 for a nominal portion. Don't put off gathering the necessary paperwork for the recovery startup business and sending it to the IRS before the quarterly deadline. Employee Retention Tax Credit Deadline 2021. As per a clause of the Infrastructure Investment and Jobs Act, an employee retention tax credit, ERTC, would be withdrawn in the fourth quarter of 2021, as well as the deadline for eligible salary will be pushed back from December 31st until September 30th. The ERTC is a COVID-19 economic relief program that was introduced in 2020 and expanded in 2021, and it provides a refundable tax credit of up to $10,000 in wages each quarter provided by an eligible employer in 2021 to encourage firms affected by COVID-19 to keep people on their payroll. This indicates that the 2021 tax credit might be worth up to $21,000 per employee, $7,000 each quarter. Companies with 500 or fewer workers were required to file a 2021 claim if gross receipts fell by 20% or more in a quarter compared to the same period in 2019. Employers claim the ERTC by withholding payroll taxes on earnings paid to qualified employees. If economic conditions indicate a need, the possibility to claim the ERTC in the fourth quarter might be reinstated in a future piece of legislation. Employee retention tax credits were first enacted as components of a CARES Act. These credits repay qualified companies for qualifying salary payments, motivating them to keep their staff during the COVID-19 pandemic. ERTCs reimburse qualifying companies for 70% of acceptable payroll expenditures, up to $10,000 per employee each quarter. This implies that each employee can receive up to $7,000 every quarter. On December 31, 2021, ERTCs were slated to expire. The new Infrastructure Investment and Jobs Act, on the other hand, establishes an earlier deadline for implementation. ERTCs were then expired on September 30, 2021, with the date being retroactive. The total credit amount per employee has been reduced from $28,000 to $21,000 as a result of this modification. Except for recovery starting enterprises, this new deadline applies to all qualified employers. If you're a recovery starting firm, you have December 31, 2021 to claim ERTCs for qualified salary payments. Due to the COVID-19 pandemic, many American companies across the country are failing. Therefore, the U.S. government responded by approving multiple stimulus packages and tax breaks throughout 2020 and into 2021. The Employee Retention Tax Credit, which has been extended through 2021 and has a potential value of up to $26,000 per employee, is one important tax credit that employers should be aware of. The Consolidated Appropriations Act of 2021 got passed into law on December 27, 2020. Among several other adjustments and improvements to COVID-19 second's previous relief measures, this measure specifies and enhances the Employee Retention Tax Credit, which was established by the CARES Act in March of 2020. One of the more important changes in the statute is that the Employee Retention Tax Credit is now available to businesses who have gotten or shall obtain a Paycheck Protection Program loan. Employers will profit significantly from this amendment in the law, which will aid them amid the economic disruptions caused by the COVID-19 outbreak. The American Rescue Plan Act, signed by President Biden in March 2021, restores the credit, which was set to expire in June 2020 for the first 3/4 of 2021. The Employee Retention Tax Credit was developed as part of the CARES Act to incentivize businesses to sustain employees on the payroll during the COVID-19 pandemic. On December 2, 2021, Congress enacted the Infrastructure Investment and Jobs Act. 80,604 of the Act's title via other provisions governs the termination of ERC for employers facing closure as a result of COVID-19. The deadline has been moved to October 1, 2021. In this area, a recovering beginning business's wages are an exception. The initial deadline of January 1, 2022 is still in effect for those qualified periods as per the Internal Revenue Service. The eligibility criteria for recovery startups no longer have to reduce their gross sales or close their doors. Most firms will be affected by the deletion of the fourth quarter of 2021, as the maximum credit qualifying amount will be reduced from $28,000 to $21,000. Businesses that plan their finances based on the expectation of receiving ERTC service in the fourth quarter may suffer as a result of the shift. Employee Retention Tax Credit 2021. As per Coronavirus Aid, Relief, and Economic Security Act, companies can receive a tax credit to mitigate their payroll taxes and obtain a refund until December 31, 2020. The Employee Retention Tax Credit was extended through June 30, 2021, as part of the COVID-19 Tax Relief Act of 2020. Certain enhancements were added, and they went into effect on January 1, 2021. This restricted the use of ERTC to certain dates between March 13, 2020 and September 30, 2021. Employee Retention Tax Credit updates. The Employee Retention Tax Credit was created as part of the Coronavirus Aid, Relief, and Economic Security Act to incentivize businesses to keep their employees on the payroll as they deal with the devastating effects of COVID-19. Qualifying companies are eligible for a refundable payroll tax credit equal to a percentage of qualified salaries. Employers were also first barred from obtaining a PPP loan and claiming the ERTC. The CARES Act was revised by the Consolidated Appropriations Act to allow all qualified enterprises to claim the ERTC, even if they had previously received a PPP loan. Under the Act, the ERTC was also extended until early 2021. So under the American Rescue Plan Act, the ERTC was prolonged until the conclusion of 2021. In 2021, eligible businesses can qualify equally for 70% of qualified earnings per quarter. The system sends $7,000 every quarter to each employee. The Infrastructure Investment and Jobs Act changed the ERTC program even further. Salaries paid beyond October 30, 2021 are no longer considered eligible earnings for the ERTC. This week, the IRS provided more instructions defining the procedure. Failure to refund this money by the deadline will result in failure to pay penalties. The IRS will no longer waive failing to deposit fines for employers who lower deposits after December 20, 2021, for taxpayers who rather reduce their necessary deposits. On or before the deadline for Form 941 for wages received on December 31, 2021, the monies withheld from the mandatory tax contributions earlier in the quarter must be deposited. The calendar quarter is considered eligible if the procedure of a trade or commerce is fully or partially delayed during the fiscal quarter due to an order from a suitable governmental power limiting commercial activity, travel, or group sessions due to COVID-19. If a company's gross receipts drop significantly, it's an eligible company. A significant reduction in gross revenues in 2020 is defined as a drop of at least 50% in any calendar month when compared to the very same period in 2019. A significant reduction in gross receipts in 2021 is defined as a drop in gross receipts of at least 20% in any fiscal quarter encompassing January 1 to September 30, 2021, when contrasted to the same fiscal quarter of 2019. If this criterion is not met, a special regulation in effect for 2021 allows a qualifying employer to compute a gross revenue decrease of more than 20% by contrasting total sales in the previous quarter to the very same quarter in 2019. Gross revenues encompass all profits, regardless of whether they were obtained in the ordinary course of the taxpayer's business or activity. It's also worth mentioning that for widely owned businesses, there are connection criteria that might limit loan eligibility. New notices specifications. The link between the PPP as well as the ERTC was addressed in Notice 2021-20. A style is used to demonstrate how a choice is made and also how excess wages spent on a credit application need to be managed. The interaction is specifically addressed in the Notices Question 49, which contains 7 detailed illustrations of possible scenarios. Excess employment expenses may be eligible for ERTC review if you disclosed all qualified earnings on the PPP loan forgiveness petition together with your other charges, culminating in an excessive overall expenditure. If you have any additional expenditures beyond your payroll which were not indicated on the application, you could go back and change them after the fact. As per the official directive, you can make the election by merely not reporting the ERTC for all those particular profits on the relevant 941 form. Notice 2021-23, which gives further information on defining updates and other amendments to the ERTC for 2021, contains the ERTC guidance for the first and second parts of 2021. Other FAQs related to the Employee Retention Tax Credit deadline. Is it too late to claim the Employee Retention Credit for 2021? Employee Retention Credit was available throughout the fourth quarter of 2021 for those enterprises that started before February 15, 2020. The eligibility for the ERC expires in the third quarter of 2021. For the most part, if you started your firm before February 15, 2020, you may still be eligible to claim payroll tax credits for 2020 and the first 3 quarters of 2021. There is fresh IRS guidance to consider if you still wish to pursue them or have already done so. The Internal Revenue Service, IRS, published guidelines in late 2021 on when and how to claim the Employee Retention Credit on the business's income tax return and partial suspension. As a result, business tax returns may need to be revised. Can I still apply for Employee Retention Credit? Even though the Employee Retention Tax Credits are set to expire on October 1, 2021, if your company qualifies, you may still take potential benefits from them. You could apply for a retroactive ERTC refund as well as health care benefits if you didn't apply for the credit earlier. Use Form 941X, Modified Employers' Quarterly Federal Tax Returns, and credit each worker for repayment to file retroactively. You have 3 months to file after the commencement of your first filing. How do I apply for retroactive Employee Retention Credit? On March 1, 2021, the IRS issued Notice 2021-20, which included guidelines for both qualifying employees and individual workers claiming this Employee Retention Tax Credit. The notification, however, only covers the credit as it pertains to qualifying salaries received between March 12, 2020 and September 30, 2021. The program's revised termination date for most firms. Businesses must complete Form 941X, Request for Refund, for the pertinent quarters in which the eligible wages were received to claim the credit for prior quarters. Conclusion and summary related to the Employee Retention Tax Credit deadline. The Infrastructure Investment and Jobs Act has established the Employee Retention Tax Credit, which is meant for helping small businesses in the face of COVID-19. However, an Employee Retention Tax Credit deadline also exists, which should be considered if a business finds itself eligible for Employee Retention Tax Credit. The ERTC deadline changed from the previous date of January 1, 2022 to a new date of October 1, 2021, as stipulated by the Infrastructure Investment and Jobs Act.
As you can see, navigating the Employee Retention Credit Program is very complex and confusing to try to figure it out on your own. Even on the IRS ERC FAQ pages, it says this page is not current. There have been several years of updates and changes to this IRS tax credit already, including 4 congressional acts and 5 updated guidances from the IRS, totaling over 3,900 pages. Who has time to sift through all that information, let alone decipher some of the confusing language and rulings? In order to stay compliant with current IRS ERC rules and regulations, expert specialized help is highly recommended. Even if your business received an SBA PPP loan, you are still eligible for the ERC credit. If you think you may not qualify, it's worth a conversation to see if your business does. Let us assist you with a complete employee retention credit process, or if you might be stuck on filling out the IRS 941X forms correctly on your own. We are here to help. Stay safe, stay compliant, keep more of your refund. Email us at support@disasterloanadvisors.com or call us toll-free at 877-463-9777 extension 3. Or visit us on the web at www.disasterloanadvisors.com/ERC for complete details on the Employee Retention Credit Program for your business.